Hey guys, welcome back to Finance for Firefighters. We've covered several different topics so far. Today's topic is going to be probably some review for most of you folks. I think it's good to just cover this stuff just really for the sake of being thorough. So today we're going to cover banking do's and don'ts, everything related to all the stuff you do with your bank. Okay, so talking about the differences between some basic banks that a lot of us use, we'll discuss the differences between banks versus credit unions. So banks are very well known, Bank of America, Wells Fargo, Chase, things like that. The advantages of businesses like this are the technology piece, right? They have more money coming into them, so there's a lot more convenience things, technology, a lot of that related stuff that's maybe a little more convenient. There's ATMs everywhere, there's banks everywhere, a lot of customer service related stuff. The downside about these is that they typically tend to be more expensive. So because they are bigger businesses, they are geared at profit. So they have things set up that are geared that way. Marketing, advertisements, most of their rates and fees and stuff tend to benefit them and their stockholders. They don't tend to benefit the people who have the money in those banks. So banks are good for us. The big banks are good for being able to have ATMs that are readily accessible or have things that we can do with the bigger businesses in those respects. But if we're looking at benefits for car loans or other things that are going to pass profit on to us, banks tend to not be the best thing for that for you. So just the difference between the bank itself, the main meat and potatoes of that. Now let's talk about credit unions. Credit unions are more shared profit, shared ownership, that kind of thing between people who have memberships there. So there's tons of them locally in your area. I know for us here in California, Firefighters First Credit Union is an example of a credit union for us. They have they're not really set up as profit-based companies. Now they have people who obviously have jobs and they have to have certain things for advertisement and things like that, but they tend not to spend the extra money on the marketing and the extra money on the business side of it, the technology side. There's a little bit of a delay in some of those things, but the advantage is if you're doing a car loan or any other kind of personal loan, they tend to have much better rates for you. Same thing for savings accounts. If you're going to have a savings account at a credit union versus a bank, the credit union tends to have a lot better rates. They're going to have higher percentages that you're going to pass along to the members of the credit union versus the banks itself, which is more for-profit based. The differences between the credit unions and the banks, they're both federally insured, things like that. But it's, at least for me, one of the things I like to practice is not having all of my eggs in one basket. So an advantage of having maybe an account at both different types of things would be if I'm going to have a membership or an account at a credit union, that could be something set up for me where it's less accessible. So if I'm using that for savings accounts, or I'm doing a short-term savings, or if I'm going to have personal loans or auto loans or boat loans or whatever through that, the credit union tends to be a much better spot for that. The bank is good for ease of access to ATMs or other kind of technological things that are more convenient, like being able to auto pay bills and things like that. And I personally like not having all my eggs in one basket, so that if something happens, if there's fraud at one or the other, you still have another conduit to have finances to be able to pay for other bills and things like that come up. All right, let's discuss card use. So we have cards on our wallet, right? Typically you have an ATM card, automatic teller machine is what that stands for, and then a credit card. The advantage of the ATM card is I can go and I can use that and pull cash out with it. The credit card use is it's a lot more easily tracked and things like that. I'll discuss some basic things that you folks may or may not be aware of with both of those things. So for an ATM card, it has a little Visa logo typically on there. You can run it as credit without having to put your PIN in and things like that. If you were going to use your ATM card anywhere except for your bank's ATM, run it as a credit card. I personally don't like using my ATM card anywhere except for my bank's personal ATM because there's a lot of fraud out there where they have chip readers and things like that to where they can scan it, get my ATM card number, and if they get my PIN number associated with that, they can actually copy it, go to my bank, withdraw money from it, and actually clear out my checking or any other linked savings accounts with that. So if I must use my ATM card in anything that's not my bank's ATM, I run it as a credit card. I really try not to do that, but if I have to, I run it as a credit card and I don't put my PIN in. The majority of things I like to do is use my credit card for virtually all of our expenses. So I run it as a credit because it is a credit card. Even if there is theft or fraud or something like that, and they copy the card, a lot of the credit cards have a lot of safety measures set up into there for fraud and things like that. If I'm not used to spending, $1,000 on Amazon or Apple or something else like that, the credit card tends to flag that stuff and freeze it before something else, a ton of theft and fraud happens. Versus an ATM card, there's less things in place for that. Other reasons to use a credit card versus a debit card is typically a debit card is only going to be able to they're only going to protect you for up to 1 to 3 months, depending on your bank, and only up to a certain amount of money in that, maybe $1,000 or $5,000, something like that. If somebody gets your ATM card, they copy it, they have your PIN, they copy that because they have one of those readers in a Target or a Safeway or a gas station or something like that. If they copy it and they're able to go to your bank with your PIN, they could pull out everything out of your checking account, they could pull everything out of your savings accounts, and there's really not a whole lot of protections for you on that. From the credit card side of it, if there's fraud, it tends to flag it right away. And credit cards tend to protect you from up to an entire year, and it'll be virtually the entire amount depending on which credit card company that you have. So if you have significant fraud, much better chance of it getting flagged and stopped with a credit card, and it's a much higher amount of money you're actually going to be able to recoup. Somebody gets a hold of your bank card and they clear out, or your ATM card, and they clear out your checking and savings accounts, there's not really a whole lot of protections for you from a theft fraud standpoint from your bank, depending on which one it is. Other advantages that I see for the credit card use is obviously the theft and protection aspect of it for the significant amount of money. But when I'm using it, I'm also building credit while doing so, which helps bring up my credit score so that when I get loans for vehicles or for my home or personal loans or anything else like that, I've already got credit established that is constantly flowing. So my credit is constantly building with that. There's also, depending on the bank that you use, for me, I have a Bank of America credit card. That one, just after a certain amount of money that I am spending on it, it actually gives a credit back to where we'll have cash back at the end of a year or a couple years or whatever, depending on how often we cash that out. But that credit actually turns into cash. So my wife and I have had several times, it's every year or two, we cash it out, and it's a few $1,000s that we have. It's kind of like our play money to do something else with. You can also get them set up to where if you shop at a certain store, or a lot of folks like it if they travel, they'll do a credit card that they'll use, and it'll just be airline miles. So if they have a Southwest credit card, every time they scan that, they're earning points that they're able to use for flights and things like that. If you folks are big into travel, that's another benefit that you have. There's tons of different types of things you can use from the credit card use as far as getting it for credit in whatever particular hobby or habits that you have. And then the last thing I like about the credit card use is it's much easier to track. So if I have virtually all of my expenses on a credit card, and I'm doing things at the end of the year from taxes, or if I have other expenses for home or renovations I've done or anything else like that, all of that stuff is in one place. I'm not going and trying to find receipts that I use for a debit card or cash that I put somewhere or something else like that. At the end of the year, I'm able to track it for tax purposes. And then for my wife and I, we basically balance our books every 2 weeks. At the end of the 2-week period, you can go back, scan through, be like, hey, what do we spend money on? Cool. How are we lining up with our budget? Things like that. And we're able to basically clear that out. So having everything in one place on the credit card is really helpful for us in that respect. Okay, another important thing to mention is a filing system. So 2 separate categories for that. One of them is things that you just trash and things that you shred, right? As far as things that you're getting rid of. So anything in the trash is basically just like the extra coupons and things like that I get in the mail. I just trash that stuff. Things that I'll shred will be anything that's like personal information on there, my name, date of birth, things like that. There's so much of that stuff out there. Credit card companies, when I'm checking things out, I buy things or I've applied for loans or something else like that, it automatically gets fed into a big marketing system to where they're constantly sending you credit card offers and things like that. And if you don't shred that stuff and you just toss it, you're putting yourself at risk for fraud in the future for that. So anything that you're not going to keep like that would shred. As far as stuff that you keep for your own personal use, anything you're going to need for tax records up to a 7-year period is a good amount to, or a good time frame to keep those relevant bills and stuff like that. The IRS requires not just like a credit card statement showing what you've done, but the actual physical receipts if you're using any of those things for itemized deductions and things like that. So I'd keep all of those kinds of statements that you need for that. So credit card statements, receipts, anything like that that you would use for a tax part of it, I would definitely keep that. Statements that you use for bank statements, retirement accounts, things like that. All those things that you have any kind of vested interest in, keep that for a 7-year period. Utility bills, things like that you're going to be using for the IRS part of it. If you're going to use any of that stuff for a write-off, keep that for the 7 years. But if you don't use those for specific deductions, trash those things after about a year. And then again, anything with personal information on there, definitely throw it through your shredder. So things to keep would be your anything related to your tax records, bank bills, statements, things like that, any retirement account statements, medical bills, medical statements, all those other kinds of things that you want to keep. Obviously, your marriage certificates, birth certificates, or marriage license, things like that. All that kind of stuff, you'd obviously save that for forever. But the other thing you'd want to keep would be any kind of bill stuff related to that within a 7-year period you need to keep for IRS filing stuff. As far as the protection thing goes too, a lot of times we get statements on a monthly basis. I've switched over to just getting the majority of them on an e-statement or a digital statement. It protects you significantly more from having that stuff picked up by somebody from your mailbox and things like that. If you're old-fashioned and you like to actually physically get that stuff and physically put it in a filing system, what I'd recommend is having a locking mailbox if you can, or at least clear out your mailbox frequently so that stuff isn't left in there, and just keep track of it so that things aren't going missing on you. But once you have that stuff set up physically, I'd also recommend having a digital copy set up. On your phone now, they have a way of just using your in your Notes app, just scanning documents really quick. If you have a printer, they can feed it through and scan documents to keep them digitally recorded. That's a great way of keeping things organized, and then that way you have copies of that stuff for the future. All right, let's talk about some stuff related to identity protection. There are several different companies that you can use for identity theft. I know Costco has something that's a pretty decent price. A lot of different companies offer that because there's so many schemes out there that are aimed at getting your identity and really swindling you out of money, ruining your credit, things like that. A lot of that stuff at your expense. So some basic stuff that I just have seen personally is there's a lot of automatic text messages, a lot of automatic phone calls, things like that are set up in a way that are kind of set up to scare you into it. Like, hey, your bank shows fraud at Amazon or something else like that. Anytime I get messages like that across my phone, email, text messages, things like that, I just block that contact info. I know on the Apple phone, you can just go into the eye at the top of it, click on that, hit block contact. I just try to do that every single time and then just get that stuff out of there. I don't take any personal things like that. If there's ever anything I'm actually concerned about with that, with my bank or something like that, I'm physically going to go into the branch and talk to an actual human so that I'm not getting somebody on the phone saying that they're a part of the bank, or somebody saying there's a cop and there's some sort of thing I have to do. I'm physically going to go and talk to a person. That's going to protect me the best from those kinds of things. A good recommendation is to get your credit done at least once a year. There's the 3 big companies. It's Experian, TransUnion, Equifax. If you go through them, you can do a lot of them will let you do a free one every year. It's not going to give your credit score, but it'll at least be a credit evaluation, make sure there's no outstanding loans or debt or something new that you don't have, that you haven't physically done on your own. Those kinds of things are a great way to do that regularly, to have an idea of at least how your credit score is. If you pay a little extra, you can get the credit score as part of it, but you can track that stuff to see if things are improving. Don't do it too often. I think once a year is probably plenty. If you've had fraud or things like that happen, paying for the identity protection and doing that more regularly would be a better thing for you. But generally, for most people who haven't had that happen to them, once a year is fine, and it's a good way of tracking your trend, just like you would for looking at your net worth to just make sure you have a positive growth on a lot of your finances. If you don't want to pay for the $10 to $50, depending on which company does it for their continuous monitoring of your credit, you can actually contact those 3 big credit bureaus, the Experian, TransUnion, and then Equifax. You can go to them and physically freeze your credit. If you don't have things where you're going to be needing to run a credit check in any kind of near future, if you physically call them, contact them, and then just put a freeze on everything, it's actually impossible for somebody to steal your identity and basically get debt in your name. They'd have to be able to basically call back and have all of your specific personal information, pretending that they are you, to be able to unfreeze it. So if you're already set up for a house, your vehicles, there's no real loans or debt or anything like that you're going to need, by just contacting those companies for free, you could just say, hey, I want to freeze my credit right now, and they will put a complete freeze on it. You'll still be able to use your current credit card and things like that, but you won't be able to open any new accounts until you actually unfreeze that. So I think it takes a day to to lock it in, and it's within a few days of unlocking it after you've done that. So that's a great way to protect yourself from fraud. All right, guys. So that basically wraps it up for today. I just wanted to cover some basic concepts that you may or may not have been aware of. A lot of the stuff seems like common sense, and a lot of it really is common sense. But the having good discipline and just good methods for how you handle most of your finances with your bank, credit, theft protection, things like that, are a great way to just protect yourself from expensive hiccups that can happen just by card use or by some fraud stuff that can happen to you folks. Same thing as always. If you guys have any questions, want anything, enjoy what you're hearing, give a thumbs up, leave comments, and I'll see you guys in the next one.